So in the recent weeks and months, we have noticed very strong rallies in the oil and gas stocks, where Canadian companies like Suncor, Imperial Oil and Cenovus Energy have recorded very strong gains in the last couple of months. And not just Canadian companies. If you look around the world, even the bigger counterparts in the USA have been recording strong gains in the last 1 year. And other big players in the other parts of the world are also seeing a lot of growth. And not only that, most of these companies actually pay relatively hefty dividends, which make them a really sweet deal. So there is an obvious temptation to add these stocks in your portfolio. But at the same time, a lot of us are wondering that if the world is moving towards clean energy and renewable energy, then why the heck these stocks are rising so much? And if at all, there is still room for us to get in on these stock rallies. So in this video, I'm going to share with you very intuitive and easy to understand rationale explaining why oil and gas stocks are still a very lucrative option and could be a great addition to your portfolio. And not only that, I will also be hinting at some of the stocks that in my personal opinion could be a great fit for your investment portfolio. So hello and welcome back to Alpha Ambition. My name is Jasdeep and hope all of you are doing really good. Recently I got a question in one of my videos in the comment section where one of the viewers asked me what are my thoughts around Suncor as a stock. And considering many of you may have a similar question, I thought the time is right for me to make a detailed video on it. So let's embark on this short journey to understand why oil and gas stocks still pack a punch. But before we begin that, I would really urge you guys to smash the like and subscribe button. Also share it with your friends and family if you really like the video. And if you do, then also check out other recommended content on my channel and I'll leave the link for those in the description box below. So let's get started. So in today's video, I'm going to cover 4 topics which will help provide substantial context and could help you formulate a smart investment decision. So let's begin with point number 1, which is how the Russia and Ukraine war will have the implications on the oil and gas prices. There is definitely pretty sad set of events happening in that part of the world, and we are seeing very inhuman acts being carried out which could never be justified. While people's lives are being disrupted, there is another important play which is also happening in the backdrop. So prices for the crude oil in the global commodity market have already been increasing, and now because of this war conflict between Russia and Ukraine, where Russia being the second largest producer of crude oil, and on top of that, given the sanctions that have been put on Russia, the oil and gas prices are only going to rise from here even further, which obviously means that you and I will have to pay more for gas in the coming days, but that also means that the oil and gas companies will be making more money and more earnings in the next couple of months and quarters to come. And this directly benefits Canadian oil and gas companies as well. Just a quick fact here, oil and gas makes up about 17.7% of total Canadian exports. In other words, we can also say that Canadian exports is majorly supported by oil and gas. And any increase in the oil and gas prices will eventually make these Canadian companies even more cash rich. And if the sanctions remain even after the war for a long term, we can expect Canadian companies to further benefit from the oil price rise. Now, second and more logical question is that given the war situation between Russia and Ukraine, whether this price rise is only a short-term trend or there is any long-term value to be made out of it. I'm going to further break this down into 5 important and simple points. First, the transition to clean and renewable energy is anyway happening at a much slower pace than expected, which means oil and gas will remain mainstream or even its usage is going to increase at least until 2030. Second, natural gas being a relatively cleaner option to the crude oil, the demand for natural gas is only set to be increased in the coming years, at least until 2035, and it is going to be a major source of energy until 2050. Third, it's not going to be a case that oil and gas companies will be completely replaced by new companies which will be investing into clean and renewable energy. In fact, a lot of these big giant oil and gas companies are investing in clean and renewable energy projects and are themselves actually the front runners in a lot of cases in the generation of cleaner energy substitutes. You see, investing in cleaner energy and renewable energy requires a lot of capital, infrastructure and experience. And these big oil and gas companies already have all of these 3 components. Although on the surface level, a lot of these oil and gas companies have been committing to net zero carbon emission targets, what this will essentially mean is that they're not going to fully replace oil with clean energy. What they're essentially doing is that they're going to balance the carbon emission savings from solar, wind, and other renewable energy sources with the carbon emission that goes into producing oil and gas. Alright, with all of those arguments in front of us, the question is whether we should consider oil and gas companies as an investment option or not. In my personal opinion, the short answer to that is yes. It is expected the oil and gas demand is only going to peak in the next 10 and 15 years. So these companies anyway have a lot of room to grow even further. And even at that point in time, it is not going to fully replace oil and gas with clean energy. And the fact that most of these companies are eventually investing in clean and renewable energy, chances are that some of these big oil and gas companies will become a big player in the future energy production as well. And please do let me know in the comment section below whether you align with those arguments or not. And if you have any counter opinion to that, please also let me know in the comment section below. I would love to hear your thoughts on this. Now, coming on to the final topic of this video is, what are the top picks for stocks and ETFs in this industry? In my personal opinion, there are two strategies that could be followed here. One, which is a more risky strategy and something which I align more as a relatively riskier investor, is to hold a bunch of oil and gas stocks in your portfolio. And a couple of companies that I'm personally investing in are Suncor, Imperial Oil, and Cenovus Energy in the Canadian context. Second, and a relatively less riskier option here, is to hold an oil and gas ETF. And one great option that I see over here is the ticker symbol IEO. It has an expense ratio of 0.4%, and the past 1 year return for this ETF has been at 54%. And on top of that, this ETF provides an average dividend yield of about 2%. Now, the fact that the ETF holds a mix of big and small companies, the return in the stock price appreciation and the dividend is going to be lower than if you're holding individual stocks in your portfolio. So definitely choose either of these strategies as per your own risk appetite. And if you've stuck around until this point, do not forget to hit the like button and also subscribe to the channel. I know, looking at YouTube analytics, the majority of the viewers of this channel have not subscribed yet. So what are you waiting for? I'm gonna keep coming up with more such content, and also please do let me know in the comment section below if there are more topics that you would like me to make a video on, and I'll surely make a video pretty soon in the future. I'll see you in the next video, and in the meantime, take very good care of yourself. Thanks and bye-bye.